The sports card market is currently in a flux. Investors have lost a chunk of equity in the last few months. Some of them are waiting out, not wanting to take any more losses. For most parts, they're sitting around, dry pockets, slapping their hands, looking at eBay completed sales listing each day, and wondering the same thing. When is the rebound coming? And what will be the game changer? What's up, YouTube? Card Boss here. We talk about everything cards, money, investing. Alright, let's go. The hobby is far from dead, and depends who you ask, the market is not in a crash. It's a good time to be a collector, or starting out as a collector. Lower end stuff are generally cheaper, and there's lots of incentive for dealers to move inventory. On the flip side, some but not all investors are crying. I know a lot of investors lost a great deal of equity in the last few months. However, they are technically not out of pocket, so as long they didn't have to liquidate their position. But it's not a great feeling holding on to depressed assets. I've got my investor hat on today, so I'm on the same boat as some of you. Before we explore what's up ahead, we need to dial back to the events that led us up to this point. The last 18 months was a very unprecedented time for the sports card market. When COVID was at its peak in March 2020, the expected global uncertainty was expected to drive the availability of disposable income downwards. Instead, we had a last dance, and the sports card market was booming. Things eased off a few months later, but they boomed again when the NBA season resumed in the bubble around August. NBA cards eased off again as the season winded down, but started to pick up during Christmas and when the 2021 season began. Now let's look at some charts. From Christmas to early January, the average daily sales was around 1 million a day. 1 million is on the healthy side, as daily averages from August the year before were around the 800,000 to the 1 million mark. Then came the month of January, when averages went up to around 2 million. This was not surprising, as the hobby could be seen picking up some steam. It was also this period that the hobby received its first jerk, with a 5.2 million sale of a PSA 952 Mickey Mantle in mid-January. And January rolled in, and it was that weekend of the Dallas Card Show that the word went out that two Michael Jordan 1986 Fleer PSA 10s had set new price records. The hobby went ballistic. Over the next 2 months, price record after record were broken. It wasn't just the quotes, everything was up. A double in prices for PSA in early March didn't seem to bother the market greatly. The market train kept on going at full and at a very dangerous speed. Then came the first crack. PSA announced a temporary halt to catch up on orders. Ironically, it was announced just a day before the 2020 Basketball Prism was due to a nationwide release. This caught many people by surprise. Even PSA's competitors wasn't prepared for what's to come. Some jumped ship to back in SGC, but PSA lawyers stood pat, intending to ride out the next few months without a submission. The hobby train started to cool just a little. Then came more news. The once record-setting Jordan rookie PSA 10 was down 50% from its all-time high. And it wasn't just one example, there were numerous. The second catalyst had ignited uncertainties on whether the market was crumbling. And finally, there was Bitcoin. After hitting an all-time high at 63,000 in the middle of April, prices dipped 25%, slightly more than a week later, and took another tumble in May to 35,000. It's now priced at 32,000. We can discuss the correlation of cryptocurrency and the card market in a separate video, but during the last 60 to 75 days, investors had enough, and some started pulling out to conserve cash. So here we are today, as at 27 June 2021, at roughly $4.5 billion market cap based on card ladder daily reports using the top cards they have on their system. A study done by Verified Market Research has the global sports trading card market valued at $13.8 billion and rising to $98 billion in 7 years. The growth numbers might be a bit off now, given that the report was published pre-COVID. I will post a link to the report in the description below. I didn't purchase the full report, but from its summary, it points out that one of the reasons for forecast boom would be investing activities, attracting fresh dollars into the industry due to its impressive returns. This is not a secret, and we are all aware of that. So, while the card industry originated from collecting, it's investors that drive the value and growth of the hobby. As much as true collectors dislike investors who are seen to manipulate the market, but its investors are the ones who are technically fueling the market and still keeping the hobby afloat. Keeping my investor hat on, we now circle back to the original question. In my opinion, what is the catalyst for a market rebound and when? One word: PSA. You're probably thinking, that's so obvious. It might seem to be the case, but a lot of investors, myself included, have been riding on the grading game for months now. Each one of us have our different strategies and approach, like the one I covered for my 1990 Marvel Universe strategy. But all in all, that's the core of where investor wealth are generated. Without PSA in service, investors is basically playing the standard speculation game on trying to predict what card goes up or down. It's no different from buying stocks from Wall Street, or Bitcoin for that matter. With grading, investors have some level of control on the upside. Grading creates value, and value creates wealth. With wealth creation, investors goes back into the market to acquire more assets and inventory, putting more cash to the hobby, and to rinse and repeat. We've all seen it. We all went through the last 18 months or so, dating back from late November 2019, when Luca base PSA 10 jumped from $76 to $250. Investors recognized opportunity and saw the road to profit, but investors needed PSA to achieve it. So despite multiple price increases, investors always found a way to navigate. But the full shutdown this March certainly caught many investors stuck on their tracks, especially those without a strong bankroll. However, if you guys watched the interview between Jeff Wilson and Nat Turner, PSA's reopening might be just around the corner. PSA is trying to be very cautious before opening the floodgates. So some of you probably received a survey email a few months back, as PSA is doing what they should be doing in assessing what the market wants and manage their pricing and workflow at the same time. So end of the day, I believe as an investor, the reopening announcement, be it more expensive service levels other than value, will be the game changer that will turn the direction of the market. Of course, there won't be an immediate correction, but I can be certain that things will start to move upwards in the right direction. So if you guys like this video and found it very useful, do like and subscribe for more content in the future. I will be putting up similar videos, so do watch out for that. Thanks and have a great day.